I'm your host, Ankar Patel. And today I have a very special guest on the line, Brian Gong of Cambrian Ventures. Brian, welcome to the show.
Thanks, Ankur. Thanks for having me.
On this podcast, we love to start with a little bit of just background on yourself personally and how you really got to where you are today at Cambrian.
Sure. Well, I'll take you all the way back to college. One of my first jobs was at the telemarketing center, believe it or not. So I was one of those annoying kids at BC that was calling the alumni asking for donations to the sports programs or the scholarship fund or whatever it is. You tend to get some pretty thick skin, calling people out of the blue asking for money. But one of the things that I had always liked to ask the alumni when I talked to them was, what was your favorite memory about BC? What really drew you to the school, and what did you get out of it? There was one person in particular that really stuck with me. Most people talked about the football games or they met their spouse at BC or something like that, but this person talked about a class in the business school called Perspectives on Business. And I was like, okay, I wasn't the best student. It seemed like an easy A, so why don't I go try and take this and bump up the GPA? And then it turns out that class was taught by Jerry Doyle and Peter Bell. So at the time, Peter was a GP at Highland Capital Partners now, and then founded Amity Ventures a couple years later. And Jerry was a partner at Sigma Prime Ventures in Boston. So both had very storied career in venture capital. It was the first time I'd ever been exposed to it. And, they were bringing in entrepreneurs and other VCs that had backed businesses like Uber and DoorDash, Open Door. And, I was just blown away by the asset class that was kind of opaque at the time. And I had no exposure to it. Fast forward to graduation, I'm having in my first job out of college and start out in venture because I'm like, oh, this is great. I need to learn as much as I can about this field. And, I'm working at the DCU FinTech Center. So they had like this, nonprofit accelerator, this free office space for the companies, exposure to the financial institution, right, mentorship. And I'm like 21 at the time, right? If I'm being honest, I really know nothing. But I was just so excited to get my foot in the door and, work with some of like these founders that had, run or sold, 10-figure businesses before, had 10, 20 years of experience in financial services. And, they turned to me as this like 21-year-old, like, what VC should we be talking to? How do we negotiate with the bank? How do I put together my go-to-market? And the entire time I'm thinking, I do not have the answer to this, but, maybe I can go and find someone that has, kind of been there and done that. And, that was kind of like a light bulb moment for me where I realized if I wanted to be a good VC, I should actually go and do the things that, my portfolio companies are doing every single day. So left ECU, worked across a couple different startups in Boston over the next few years across sales, marketing, really anything I can get my hands on just to learn what it took to build a successful seed or Series A business. And then after a few years, decided that I think I'd learned enough and wanted to go apply that to the other side of the table. So that's where a lot of my investment thesis comes from. That's how I help my portfolio companies, all centered around sales, go to market, and that kind of marketing positioning. So to speak.
Yeah, and that's highly relevant because I think a lot of founders, especially founders of tech startups, they come from product and technical backgrounds, and the go-to-market is at least half the battle, right? Getting distribution, particularly in a very competitive market backdrop, and we'll get to that in a second. But you obviously have a lot of experience investing in regulated industries, particularly in insurance. And obviously something that Multimodal highly focuses on. I think there's just a lot of great workflows that could be automated in that broader space. But maybe if we just take a step back from a VC perspective, what are key factors you consider when evaluating AI startups in these highly regulated industries? And what do you believe sets apart the most promising companies from the rest of the pack?
Yeah, it's a great question. This might be a bit of a hot take, but I don't think it's technology mode. I think AI is going to be table stakes over the next 5 to 10 years. It really is unique distribution, unique go-to-market. Insurance carriers are very, very slow moving behemoths, right? So are big financial institutions like JP Morgan and Citi. It takes a lot of time and a really fantastic use case to get them excited. You can't go in and kind of start all at once. The only way to continue to build and create a really opportunistic and promising company is to understand how those sales cycles work, how long it takes, and like if you're going out to raise, let's say a $3 or $4 million seed round, you need to take into account that it might take 12 to 16 to 18 months to close your first financial institution as a customer. And I think a lot of people kind of overstate that a little bit.
Yeah, and I think that's really been our experience as well. It's like you could have a really great product, great technology, and as a founder, you think, okay, well, you've built something that is technically very awesome, and that people just should come and buy it, right? Because it solves something that was really hard to solve technically, and you expect the market to just kind of adopt it because it's so advanced versus what they're doing, and I think that's where there's a lot of friction, which is you have this beautiful product, it's developed, you think that there should be buyers lining up, but then when you get out to market, you realize that you have to go and educate and nurture the client and build credibility. And then, in these larger organizations, especially in enterprise, it takes many, many conversations to get internal champions built out where they can actually get enough confidence in your ability to perform. And then it might start off really small scope, it might be a POC or pilot, and that could take a few months even getting it completely done. And so by the time you have something in production, it could be easily a year and a half, two. And I think you're absolutely right. I think when you plan out that journey, you need to make sure you have that lasting power in terms of capital, but then also just tenacity as a team to be able to kind of see that motion all the way through. Um, I'm curious though, when you think about, and we touched on this a little bit, I want to separate the go-to-market from the technology. When you look at the advancement of AI technology today, um, is there any long-term defensibility in what startups are doing on the AI, let's say, model or technical build side, or do you think most of that moat, and I think you alluded to this a second ago, do you believe the most of the moat is on the go-to-market side? Just curious, sort of how much of a moat can you actually build with the technology itself?
Yeah, and I don't want to be remiss in saying that tech isn't important. You still have to have a great product that customers love using. I think with AI, the landscape changes every day. There are new entrants, either using off the shelf models like Claude or OpenAI's GPT-4, and then you have newer businesses like Perplexity that are building their own LLMs in house, and maybe they're better for some use cases, maybe they're better for others. It's going to keep changing every day. The difference maker is really that speed to execution on how fast you can get your customers to buy, because everything is so new, right? When I talk to my portfolio companies, I always tell them that the thing, especially the AI related ones, product marketing is by far the best investment that you could possibly make at this stage, because there are so few thought leaders out there in the space. Every financial institution, every insurance carrier, every health system is looking to who is going to be that thought leader, who is going to tell us how to shape our AI transformation strategy. And it's being talked about in every single boardroom. So being able to do that and positioning your product in a way that seems set apart from the others, even if the tech under the hood is very similar or sometimes even identical, if you're using the same LLM, will really put you in a fantastic position to scale.
Yeah, absolutely agree. I think a lot of enterprises have conversations with startups um, because they want to get educated, they want to get inspired, right? And your ability to go and nurture that through materials, through conversations, super, super critical. And that's that product marketing piece. Only if they believe that you're well versed in their space and you know what problems they have and how to apply good technology to deliver a solution that meets their business requirements, will they even take a look at the actual technology? So a lot of that starts with messaging before you can even get to showing them the technical prowess. I think that's spot on. And I think when you look at the go-to-market side, assuming that you don't have go-to-market DNA in the founders themselves, how do you think about helping startups secure their first big go-to-market hire so they get someone right in the door? Because obviously, if you make a bad go-to-market hire, the challenge is that you're spending a whole bunch of time trying to get that go-to-market motion going, and you can easily spend 6 to 9 months with the wrong hire before you actually realize that, hey, this person's not actually the right fit for this particular product, particular startup selling into this industry. and that could burn cycles there.
Yeah, and again, this goes back to some of the advice that I give my portfolio companies. You cannot screw up your first sales hire. It is so important, especially as you're transferring that responsibility from the founder over to someone that is going to take the business to the next level. And the advice that has always rung true is hire fast but fire faster. Right, you'll figure out very quickly if a salesperson is meeting the criteria that you have set for them, assuming it's not insane, but also as a good culture fit. Right, you don't want to breed a competitive kind of relationship between your sales teams. You want everyone working towards the same goal, and setting incentives along those lines as well is a really great way to build that sales culture that is all about closing deals really quickly so everybody wins. And then of course you can go out and raise more funding or get profitable or whatever the goal is, but that first sales hire is incredibly critical, and you cannot afford to mess it up. So fire fast if you can.
Yeah, that makes a lot of sense. That's exactly right. I think you need to be super nimble when that comes to the hiring and firing decisions. Um, and I think one of the big challenges is once that hire is made, um, how do you get that person off and running? And I think there are like two philosophies. One, you hire someone that has spent a lot of time in startup land and can pick up a particular industry, but they know the technology really well, right? And they've seen maybe a stage or two ahead of where a particular startup is. So if you're Series A, they've seen how to get to B or C, and they have that, and they can kind of bring that into the mold. The other type of hire that we commonly see is an industry insider, someone that maybe has sold to big enterprise in insurance, for example, and they have connections, they know how to work the org chart. How do you advise companies that are looking to make their first hire? Do they start with someone that has more experience in startup land, and then kind of pick up the domain like insurance? Or is it better to go and hire a specialist within insurance and maybe teach them the ropes of how to sell early stage product?
I think there is always case by case. What I have always felt is the right approach, and the way to think about it is a process hire versus a closer. Right, closer is all about sales. The sales process needs to be ironclad before you bring in that kind of individual, because you're also going to be paying them quite a bit on commissions as well as their base salary. The process builder, that is like the most critical person you could possibly bring in, especially in that seed stage, where if you're a technical founder or you're more on the compliance side of things and you're not quite a salesperson, or that's not really your skill set, they can help you build out that process, whether it's using software tools like HubSpot or Salesforce, or bringing in other intent tools like Sixth Sense, or whatever it may be for that
Mm-hmm.
sales process. That individual will lay the groundwork and lay the tracks, so to speak, for the closer to then run the train and kind of take the business the rest of the way.
Yep, absolutely. And I think typically early stage, the founder ends up having to close anyways, right? Because it's you have process to go and do the top of the funnel, get people into the pipe, but when it comes down to actually going and building credibility, typically early stage, the founder or the founders have to go and kind of make that happen. And I don't think you could easily kind of give those reins away, at least in the first few million even, in terms of growth. So I think that makes a lot of sense. It's like process first, and then you focus on kind of filling out the rest of the sales org and the go to market org. Um, and I'm curious. A lot of companies, a lot of startups in particular, particularly B2B, they want to sell into enterprise. Like in insurance, it's selling into carriers is kind of the holy grail. But there are a lot of companies that are not quite at enterprise scale. Maybe they're more in mid market, um, where the revenue is a little bit faster to come by. And you can kind of go and have maybe even an earlier stage product, and it might still be viable enough. How do you advise startups in terms of thinking about um, going all in on enterprise and big logos? Because obviously, if you win one big logo, it can help kind of get the all the logos are a bit smaller because maybe they aspire to be that big logo, and so you kind of win them because of the social proof. Versus like going for more singles and doubles in mid market, and pursuing maybe an enterprise strategy either concurrently or later down the line.
Yeah, great question. Definitely should be concurrent. You need to scale your revenue while you're also chasing those huge logos, and kind of bring it, or coming back to my earlier point, it's going to take 12 to 18 months, especially in insurance with a carrier, to get them on board, to identify a use case, to find a champion. maybe there's some kind of reshuffling internally, right? Your champion leaves or for another business, or they shuffle around the org to a different area where they're no longer in charge of the P&L that would buy your software or your service. You need to be able to do both at the same time. So it's kind of almost like a seesaw where you need to generate those early wins to have that social proof, at least for the carrier. And then once you've landed a large carrier or a large logo like a JP Morgan or something, then you can bring that to mid-market and say, hey, the category leader in your space is using us. You should also use us too.
Yeah, I think that's right. It's a double pronged approach where you're winning the social proof and even the revenue in like mid market or something a little bit smaller, like credit unions, for example, and regional banks, while you're pursuing the bigger banks like enterprise banks like a JP Morgan, and then of course if you once you do have a JP Morgan or Citigroup or one of these major players, then you capture more of the regional banks and credit unions. So it's kind of going back and forth. And I think that helps hedge the risk a little bit. Like I think for myself, having come from the hedge fund world, you really don't want to have a very concentrated bet. You want focus, of course, but you want to be nimble, right? And I think that if you just play the long ball and go for homers with enterprise, you may actually run out of runway before you actually get a big logo, right? And so that could be a huge deterrent. So I think switching gears here a little bit. Um, Obviously, AI is relatively new. I think the biggest companies like enterprise are much more savvy because they have been versed in AI for a little bit. They have internal teams, they do pilots and POCs. But outside of enterprise, it feels like a lot of the conversations still involve nurturing the buyer as to how to buy and how to think about AI. And they're maybe a little bit more risk averse because they haven't gone and done a whole lot of POCs and pilots to date. But there are many companies that are targeting this particular segment, right? It could be partners of AWS and GCP. You have consulting firms. You have established startups. You have newer startups. When you think about all of this noise that you see in the AI space right now, what advice do you have for startups or companies in your portfolio around breaking through that noise, given how much competition there is already?
Yeah, that's a great question. I think consultative sales is really the answer here. Everyone, and I alluded to this a bit earlier as well, but no one really knows what's up and what's down with AI. There's so many great use cases, whether it's generative or extractive, and I'll kind of double click on that in a second. But understanding what the actual pain point is and what the goal of that client or potential customer is critical to getting your foot in the door and actually like landing them as a customer. And like we talk about financial services and your very heavily regulated industries, extractive AI is really the use case there. Right? You can't fail. You need to pull the correct information at the right time for the right person in the right place. Versus generative is great for use cases like this, where you want to put together some marketing collateral, or you want to personalize an email where if there's some poor grammar, it's not going to kill you. But if you pull a patient's medical history and an AI inaccurately says that this person has a history of diabetes and the doctor is working off of that medical history, that's a huge no-no. So like understanding what it is that your client needs in their AI use case, whether or not your solution is best fit for that. And if not, recommending another solution is actually a really great way to build thought leadership and respect within that organization, because there will absolutely be some use case that you can find for your product, whether it's extractive or generative, that they can buy. It's a question of building trust with that individual. And there's a long held saying that people don't buy software because of the solution. They buy software because of people. Right? Like building that trust is really important, especially in a highly regulated industry like insurance.
Yeah, yeah, exactly. And I would love to kind of double click into the extractive and generative in just a second. But I think what you said deeply resonates with kind of our learnings, which is in regulated industries, models need to be very well grounded so they don't hallucinate, and you have trust in the generations that come out, right? Whether it's extracting or generating, and that level of trust in the AI is also factored by. Um, do you trust the actual person or the company that's selling you the solution? Because at the end of the day, you need to feel that they know how mission critical it is that the solution works, and that they're going to not only develop it like in a POC or pilot capacity, but then the bulk of the complexity lies in production. So in production, can it work well? Can you count on it? If it doesn't work well for whatever reason, something changes, that they're going to be there to go and help address it, right? Because ultimately you're backing the horse and the person there to make sure that they can actually deliver technically. So it's not just about the solution; it's about the team, and that comes down through the consultative sale. I think there's no way around it. And of course, it's hard. It involves a lot of time and effort. It's not a PLG motion. It's very much comes down to complex sales, right? And I think it's hard to do, but when done well, you could build a really strong foundation to not only get that product in the door, but then you could expand the ACV over time with that customer because they've developed that trust in you and the company as a whole. So completely agree with that approach. As you think about companies that are trying to sell into these regulated industries, finance and insurance as a whole, it seems like some companies are trying to go and build more of like a PLG type of motion where they have a product, you could configure it on your own, so it's more self-serve for the org to use. And that's how typically software is built, like traditional software outside of ML, where you have a one size fits all. The configuration is left to mostly the buyer. Even Salesforce is like that, where more or less like there's a lot of configurations, but the buyer has to go and do that. They could get external partners to help them, but it's up to them. Versus the alternative approach, which we're starting to at least hear about and see. It's an approach also that we have a multimodal, which is we actually close that gap in terms of having more of that services or configuration done for the customer. So what they get is maybe a more fully formed solution for their use case, because unless that gap is dealt with, the ML solution really won't meet their needs, right? It won't deliver ROI. How do you think about companies in both of those camps? Is there room for both? Where could one be better than the other?
I absolutely think there's room for both. I think we're kind of at the beginning part of the crossing the chasm diagram, really, where the larger enterprises, because they have more resources, technical or otherwise, can adopt some of these product led models, machine learning or LLMs or both, right? Um, because they have those resources, they can iterate on them, and having an enterprise ready product led or product for that motion is really, really important. And I'll give you an anecdote in our own portfolio. We recently invested in Bland AI. They're a conversational AI agent. Their whole thing is that they're enterprise grade and they're enterprise ready, right? They have compliance in a lot of different areas. They have intentionally built their platform to be that, knowing that there's a part of the market that they won't be able to serve because it's API first, right? And that's okay, right? There will be application layer, AI businesses or machine learning businesses that will do just fine for SMBs and for mid market. But if you really want to crack the enterprise side of things, it has to be customizable. It has to be flexible, and like with that comes that product led approach. You want to look back, a few years. There was MongoDB and kind of the database revolution, right? Now you have Tiger Beetle is one that we've spent some time with. There's Timescale, there's Influx, right? All purpose built for some use cases, not others, and all product led motions. The reason for that is because they want the customer to understand and to devise the best use case for themselves so that they can take that, reference that, and then apply that across other customers. That's a great way to sell. So is the application layer. They just require two different approaches.
Yep. Yeah. Yeah. I think that's right. I think you don't have to go and meet everyone, every segment on the market, every type of user. You can go and hyper focus on a few and do really great by them. And I think there are different types of buyers depending on how sophisticated they are technically on their side. If they have the talent and they have the expertise and the confidence to do it on their own, they want to go work more low level and configure it on their own. Whereas, if maybe they don't have that in their DNA, or that particular team, even within a larger org, doesn't have it in their DNA, they might want something that's a little bit more white glove. And I think there's definitely enterprise is so large, so fragmented in many ways. You definitely need solutions for each of those areas. It looks like. I think the other big thing that we're seeing is the AI talent pool remains highly competitive, with a lot of the talent going to very, very large tech companies. So, the ones that we know, Amazon and Meta and others. What strategies have you found within the portfolio companies that you invest in terms of attracting and retaining top AI talent, uh, particularly in these regulated industries where perhaps insurance isn't as sexy as some of the other areas that you might see AI being applied?
Yeah, and when you're trying to compete against half a million or more total comp, it can definitely be hard to
Yeah.
try and get someone to come over to the dark side, right, and say, hey, let's hang out and eat cookies and drink beer at 8 o'clock while we're all working. I think the differentiator is culture, right? Like Google, Amazon, like these big tech companies, they move kind of slow nowadays. It's not the I guess the golden age of search anymore, right? It's very much middle management, and there's reasons
Hmm.
why there's rifts at all those larger tech organizations. And to give an anecdote, one of our portfolio companies, Alex, has done a fantastic job at building culture, and particularly in attracting engineering talent, where they're able to equate the code that those engineers are pushing to actual impact for their customers. And what I mean by that, and I can go on and on and on about Alex because they're a fantastic team, but they're helping solve the estate settlement issue. Right, it takes 600 to 900 hours to close an estate. It's an incredibly arduous process when you're already dealing with the grief of losing a loved one. So these engineers can actually see that when they push a feature, it's helping a family navigate that process. So there's very much mission alignment, right? On top of, it's a party, we're all having a great time, the company's raising up rounds, it's that this thing is about to take off. That's really the difference. And that's kind of like, if you want to think back maybe 10 or 20 years, kind of the original roots of Silicon Valley, when Uber and all these larger or now publicly traded businesses were kind of just starting out. It was a really fun time. Like if you watch the WeWork biopic, there's partying in like every scene, right?
Yeah.
Who wouldn't want to go work at WeWork if you're making 150K, you got a bunch of stock options, and you're drinking beer at work with all your buddies, and Adam Newman's throwing a party every summer.
Yeah, agreed. I think it depends on like your personal temperament, where you are in your life. You get a cushier, more stable, higher comp at one of these more established tech companies, but it's a slower pace. You're right. Like it's more middle-aged companies at this point, where they're not moving quite as fast. They don't want to move quite as fast because they don't want to break what they've built. At the it's more incremental innovation in many ways, but they do it at a scale that is quite large, and so even a small little innovation or incremental improvement can be very meaningful in terms of dollars of revenue, but you're still not going to get that fast-paced, intense, all-in experience that you would at an early stage startup. And for some people, that is better. There's maybe more bonding. It's more higher highs, lower lows, but you feel the full intensity of it, and so you feel more alive than you would anywhere else, right? And I think that if you're willing to take more risk, professionally, even higher risk, higher reward type of thing, but you're also taking a hit on the comp and kind of betting on the long haul with more equity, it could be a fantastic place. And I think a lot of people gravitate towards that. It's you do have to go into it knowing that you are going to put intense hours in. It's going to be hard. And the lows really are pretty low, but the highs are higher than you would get anywhere else. So it attracts different people. I think that's right. I think framing it appropriately for talent, in a way that if we get the right talent in the door, I think it's right. Knowing that you're not going to get some of the people that want a little bit more cushier comp and whatnot, and that's okay. I think that's right. Um, yeah, that's I think very, very important. I think the culture also I think has to be right, and being visible, like what the culture is, could be a huge advantage. And it seems like one of the portfolio companies here does exactly that. So that's amazing to see. What about some of the considerations around data privacy and infosec? And how have you been able to advise your portfolio companies around that, especially in these domains that we're talking about, right? Like insurance, or healthcare or finance. Startups obviously can go through SOC 2 and others, but I'm curious if there's any advice you have in particular for them in terms of um, having the infosec needs met for a big enterprise.
Yeah, and this kind of comes full circle to product marketing a little bit as well, right? You want to make sure that in your marketing you are emphasizing your attention to detail on PHI and PII, especially when you're dealing with an insurance carrier or a financial service institution or a healthcare related business that is dealing with that kind of sensitive data. That is always the first question that we ask when we speak with LLM businesses or newer AI companies that are selling into our industries. How are you handling our customers' data? The last thing that we want is a data breach, and we want to continue to have the trust of our customers, even though we are looking for efficiency within our businesses and trying to use and leverage new technologies like AI to do so.
Yeah. I think that's right. And I think it's still evolving too, like the regulatory landscape around what's permissive and what's not. And it's funny, like a year ago, there were not great options to using like an open AI model, right? You even have like Llama came out just about a year ago. Llama 1 did, so you didn't have really good alternatives. You didn't have like maybe even like Azure Open AI wasn't quite as prevalent, like or top of mind for a lot of companies to consider. So I think the education has gotten a lot better. I think companies have many more options than ever before. They could keep everything on their cloud or on-prem using open source and be competitive with a closed source model. So I think it's evolving, which is interesting. But yeah, it'll be interesting to see sort of how that continues to evolve as the regulatory landscape changes, not just some of the best practices.
Yeah,
So
and
it'll
I
be
think
fun
you'll
to see.
see that most of these enterprises are Microsoft shops, and because they have access to OpenAI, and there's already a PII or data privacy module built into some of Microsoft's products, that kind of makes it the go-to. That just makes it extra hard for startups that are working around this kind of technology to sell into those enterprises. So having an emphasis on it is really, really important.
Yeah,
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 agreed,
agreed,
agreed.
agreed.
So could we maybe switch gears to some of the Gen AI applications and startups building using Gen AI versus how viable traditional or classical ML is when it comes to startups that you're seeing that you're looking at as investment opportunities? How much can Gen AI really cover versus room for like non-Gen AI companies, which probably doesn't get enough airwaves today, just given how popular large language models are, but traditional and classical ML does have a place, it seems like. So I'm curious what your take has been in evaluating companies that maybe aren't as Gen AI enabled, but have really good predictive modeling or really good fraud detection built on classical ML.
Yeah, I think there are pros and cons to both. When we think about generative AI or LLMs, we need to understand if it's a feature or if it's a platform, right? There are a lot of different, Chat GPT wrappers out there, even some that are claiming that they're not, and it's GPT-4 under the hood. That's okay, but we need to know that, and we need to diligence that itself can become an entire platform that serves a category or a particular kind of customer, rather than being a nice widget that tells you that the weather is 64 and sunny today, and it's going to be 70 and rainy tomorrow. That is, and that's always been a hallmark of venture too. We think about businesses that are disrupting the status quo or enabling new businesses or technologies to be built on top of them, like OpenAI's GPT-4. Understanding that difference and getting really in the weeds on whether or not it's part of a larger platform or if it's a standalone product is really important.
Yeah, yeah, I think that's right. Um, uh, and I think the other big thing that we're seeing is that there might be room for both within a particular company, right? So under the hood, you could have Gen AI, you could have predictive modeling that's more classical ML built in, depending on what you're trying to do. So it's not even an either or, but it's more of how they're applying it. Is it a wrapper? Is it a platform that's more fully built? I think that's a really good fresh take on sort of how to frame that entire argument. What about the integration of AI with technologies like blockchain? Are you still seeing a good bit of investment opportunities with things like DeFi, which obviously used to be very, very hot a few years ago? I'm curious how that landscape has shifted over the last 2 years.
Yeah, blockchain is not really an area that we invest in at Cameron Ventures. I kind of look at it eagerly from the sidelines. If I'm being completely honest, I still think it's a bit of a buzzword trying to mush together and try and get people excited. It'll trick some VCs, but the good ones will know to stay away.
Right. So you don't really view it as well. I mean, you don't consider it as an investable opportunity, but it's also I think the applications might be so thin there that it may not be a relevant investable asset class in some ways. It seems like from what
I
you're.
Yeah, I would say that I think they both stand alone. They have not developed enough technologically and use case wise to be able to be put together, right? Like I'll give you an example for blockchain that we're taking a look at, or at least exploring, right? There's not really a good way to trade blocks of insurance business, right? If you're a producer and you sell $10 million worth of commercial auto insurance, you can't offload half of that, take a payday of 5 million, and then sell that to your buddy that works across town and sells the same policies. You need to get a lawyer involved. You need to have a valuation expert come in, right? It's a real pain in the butt. That's a great use case for a smart contract and an Oracle, right? You put that, you tokenize it as an NFT. It's very easy to transfer ownership of that asset to another individual, right? Layering AI on top of it. I'm not really sure how much alpha you can drive with that, right? I think AI is still trying to like find its footing on what use cases are fantastic for it and what's not. I think there will eventually be some crossover, but I think we're 5 or 10 years away from that.
Yeah. And I think another interesting thing I want to kind of pull on is we talked a lot about startups, evaluating startups, and where the opportunities are, how they should go to market. Flipping the equation a little bit here, a little bit. When you look at enterprise like insurance carriers, thinking about adoption of AI, some of them have internal teams that they're leveraging and running experience with, sometimes directly using OpenAI or some of the microservices on AWS or GCP and Azure. They might also do pilots and POCs with external vendors. They also have access to consulting firms that can help not only do the management consulting side of things, but then actually do execution like a BCG. What are you seeing among enterprises, the way that they're approaching AI? How should they really shape the buy, build versus partner decision?
I would argue that for insurance specifically, there are very few carriers at the enterprise grade that are ready to buy or build. For us, we're not really ready for any of those things, right? A lot of carriers, especially mid-market carriers, are still accepting, applications for policies via PDF over email, right? Like to try and take that, extract the information, and then put that into a policy admin system and then quote it is not a difficult workflow, right? That's a lot of what multimodal can do, to your point, but we're not quite ready for true generative intelligence, right? Or true AI in underwriting, for example. We can kind of stitch a bunch of things in between, but to the effect of what you're able to do with like automated underwriting for mortgage, right? Like those are all like real variables that you can go and quantify and run analysis on. Within insurance, there are some of that, but it's buried in unstructured data, layered in other unstructured data in your email. Sometimes it's text message. Like we're still trying to figure out how to consolidate all that data in one place and take advantage of all of it. Whereas you have some larger carriers like the Nationwides and the State Farms and the Geicos of the world that again have those larger technical teams that can go out and experiment, but no one is really quite ready to buy. I think a lot of people are still kicking the tires and trying to figure out what is a one great use case to start, and then let's prove that we can have a real ROI or ROT, and then expand that use case across other business units, other policy lines, so on and so forth.
Yeah. And as they consider these use cases, how do they get better versed in the technology, right? Because I think that's one of the common themes that I saw firsthand at InsurTech New York, the conference that you and I were both at, which is um, a lot of these insurance players want to be inspired. They want to be educated. They want to learn. That's why they go to these conferences. The intent is very much there. The question is like, how do you actually do great follow through motion? And obviously, startups want to be part of that conversation, help shape it. So maybe if you have some ideas of what are best practices for, or advice even for some of the insurance players, that would be really meaningful to hear.
Yeah, I think it's very easy to listen to Jensen Huang speak and think that AI is going to be the future of everything. I think the important thing to note, and like the reason why these executives are attending conferences like InsurTech New York, is they need to understand what the limitations are. right? And that's
Mhm.
where the consultative sale comes into approach, where, yes, we can help you with this, but we can't help you with that. Here's a great vendor that we work with or that we know very well that fits this use case very well. Let's try and attack both at the same time. And then over time, we either add new products where we can take that business away and kind of grow our share of wallet or share of budget within that enterprise, and then continue to educate and nurture along the way. Like, this technology is still very, very new. It's fantastic, but I think a lot of people say AI and think, anything could happen. There are very real limitations to what this technology can and can't do. I think carriers are slowly coming around to the fact that it can't just solve all of our problems. We have to find something specific that we can apply it to.
Yeah. Yeah, I think that's right. And when you do the consultative sale, you build trust because you're able to say, you're able to inform, yes, this is something that is automatable. Let's say if you run an automation company, or not. So you're helping shape that conversation, right? You're informing, you're educating, because there's a lot of things that Gen AI, or AI in general is not able to tackle, right? Or because of the org, because of the way that how much volume that they have, because of the way that their data is structured today, it may not be the place you start. Like you said, in insurance, the challenge is you're getting a lot of messages and context from email, and photographs are submitted in all sorts of different ways. Some of it's coming through text, and so the data streams are very complex and fragmented and unstructured. And before you could really apply a lot of great modeling, you actually need to kind of get all those data streams basically streamlined so that they are readily accessible. And until that heavy lift is done, you really can't work on more automated, let's say, underwriting, even claims processing may be more limited, right? And so trying to figure out where to start, which problems to tackle first is really important, because one of the things that we see and we also hear firsthand, is a lot of enterprises, they're getting stuck in this proof of concept land, right? They're not able to get out of that and land things in production. Of course, in regulated industries, it's even more complex, because not only you have to get a POC done, but when you talk about production, it needs to work and work well, because if it doesn't, it's going to have critical outcomes, because of how sensitive these applications are. Um, have you seen something similar where companies are experimenting, they're getting maybe lengthy POC cycles and are struggling to get into production? And I'm curious if you have any advice for how to go more from POC land into production more readily.
Yeah, that's a really sticky problem, and again, kind of points to the fact that there are some enterprises that are ready and willing to adopt technology like this, and there are some that are just, kicking the tires and trying to see if there is a use case, but not really quite ready to buy. We're seeing a pretty secular shift in enterprise spend away from general enterprise SaaS tools into AI powered SaaS tools or AI itself. But we're still at the very, very beginning. So that proof of concept is great to talk about, and it's great to have on your slide deck, right? And to have a referenceable customer. But at the end of the day, it really is nailing down that precise use case. And even if it is, 10K a month, 5K a month contract just to get your foot in the door, that's how you start to, really grab the attention of the enterprise, because you've already made it through their security audit. You've made it past,
Mhm.
the first or second rung of approval. Even if it's a small ACV, you are starting to build trust within the organization. And again, that kind of consultative sale where, yes, we can help with this. No, we can't. No, we cannot help with that. That's really important in getting and kind of graduating from proof of concept to a full blown contract. Real trust with that person that is actually making the buying decision. And, at the end of the day, the whole kind of ethos behind enterprise sales is how can you get the guy that's buying from you to get a promotion. So I'll,
Yeah,
I'll leave you with that.
yeah, no, absolutely, it's exactly right. You want to make the buyer win. You want to help the buyer win in whatever it is that they're trying to do, and typically a lot of that is delivering a lot of value, as part of their role, as part of their mandate, making them look really great. That's super important. You build trust, and then you could layer on top of that more larger projects and initiatives, right? But that first proof of value has to be there. I think that's exactly right. It's a consultative sale. It's built on trust, and then on you can kind of layer on top of that more over time. But you have to be able to be willing to start somewhere small and then get that foothold and expand from there.
Yeah, it's counterintuitive, but sometimes guiding them to no is actually the right answer, right? They're not the right customer for you. They're not the right customer for your product. Um, you can continue to nurture that relationship over time. Like see them from afar or reach out from afar, and at the point where they are ready for a solution like yours, that's when you can re-engage. They already know you. They trust you. They've been seeing thought leadership from your business. I think on average, I forget what the actual statistic is, but I think it's 13 hours of customer education or customer content to win an enterprise deal. Like they need to really trust the solution that they're buying, because they'll get fired if it doesn't work out.
Yeah. Yeah, and exactly, and I think that's right. And they also need to be educated enough where they can go and make a strong case for it among their higher ups, and you need to arm them with enough context and intel and sales enablement materials, everything to kind of make them informed enough to actually go and weigh in on whether this is the right thing or not, and then give them the knowledge to be able to circulate that among the rest of their peers or higher ups. So it's a pretty complex sale. Multiple champions need to be bought in order for that check to be written. So let's switch gears here a little bit because I'm very curious. Obviously, macro backdrop, much tighter. I think CFOs and such are much more focused on reducing expense. Pricing models are changing. We see we see and hear a lot of like usage based pricing models or volume tiered pricing models. Maybe the other alternatives are seat or by head. But curious, like when you talk about go to market and pricing strategy, what are you advising your portfolio companies? And how can they really help shape the pricing strategy that they have? And I guess this is relevant also for buyers, right, in mid market or enterprise, what they should be gravitating or pushing for with the contracts that they evaluate.
Yeah, I love this question. It always comes back to whether it's a consumer sale or an enterprise sale. You need to provide more value to your client than they think that they're paying for. And that is a very difficult thing to do. But if you, and this is really the power of AI, right? Where you can take a workflow and you can decrease the amount of time spent on it by 50% or more. You can decrease the cost of to service a customer using like go back to Bland, right? An enterprise grade conversational AI tool. You can decrease your customer service costs by 80, 90%. That's a huge cost center for, insurance carriers, financial services institutions that are, paying BPOs in the States and, abroad, millions and millions of dollars every year just to, have a poor customer service experience when you're trying to, claim fraud on your credit card, right?
Mhm.
You need to really show that ROI or ROT. I use that analogy a lot, but the return on time. It's very difficult to quantify that, especially with AI. But if you're able to do it and present it in a way that makes sense on the business side and on the technical side, it's absolute magic.
Yeah, 100% agree. I think for us, and this kind of alludes to, or not alludes to, but ties into what you were saying earlier, which is sometimes no is the right answer. If you're not able to deliver an ROI that's meaningful, right? If it's, for us, it's like at least 5x the amount of investment. If, and we look at workflows, right? So if the ROI from automating that workflow, or automating part of that workflow isn't 5x what you spend on us, the investment you make, it's not worth it because it takes time, effort, attention, money to go and do. And so choosing the right places to go and automate, let's say, that's super important. Sometimes you just don't have enough volume, where the process is too complex, where that ROI is too questionable. And then the right answer is no, like we shouldn't touch this. We recommend not doing any of this. So framing it as a ROI calculation, giving them confidence that they're going to get the expected return that they're looking for from investing in the time and effort and money that they spend with you, super critical. And then I think that opens up ways to go and align price relative to that, right? I think we'll see kind of new pricing mechanisms, especially if you can really show how much value you're delivering. It could really be based more directly to the value that gets delivered. So, for example, if a process took 2 hours and now all of a sudden with the technology you have, it's taking 15 minutes, you really know the value you're delivering to the customer because 2 hours is worth X dollars, 15 minutes is worth Y dollars, and then it's just the difference between the two. It makes it much easier to calculate on both sides.
Yeah, absolutely.
Yeah. So as you're looking at the AI backdrop, I'm curious how you stay really informed because you're obviously dialed in. You know this broader landscape. It's hard to stay on top of, and you've been doing a phenomenal job of like breaking down these questions with incredible insight. So how do you personally, or maybe Cameron as a whole, stay on top of all the major developments, just given how fast the space is moving?
Yeah, I would be lying if I said it was easy, but I think it comes down to two things. One, I think we're genuinely interested in how this technology can not only change the businesses that we're affiliated with, but also change our lives personally. We're also consumers, right? I've played around with GPT-4, I've played around with Perplexity, I've looked at all these tools to figure out if this is actually the right tool that can be transformational, right? And I keep talking about Bland way too much, but I found them through Twitter, right? I played around with their demo and I was talking to their AI over the phone. I was like, this is going to change everything. Less than like 300 millisecond latency and response time, enterprise grade with security controls in place. Like this is exactly what our affiliated businesses and what the insurance industry is looking for. That kind of insight only comes with being on the front lines and interacting with things as if you're the customer. And it's
Yeah.
also kind of fun to do. So
Yeah, exactly. It's a fun job. It's challenging, but it's fun. It's rewarding, and I think you get to pioneer in some ways. The show's name is Pioneer as well. You're pioneering the introduction of this technology in spaces that really need it, right? Like insurance. So, yeah, it's awesome, Brian. I really appreciate that. What can do you have any sort of call to action for listeners or viewers of this podcast? How can they learn a little bit more about you and Cameron?
yeah, we'll visit my LinkedIn page and my Twitter profile. I forget what the URL is for Twitter. I don't really use it too much, but our website is CameronVC.com. Check out our portfolio. I think most of them are hiring right now. So if you think you're a great fit and you want to join a great culture with a great team, hit me up and I'll try and connect you with them. And if you're a founder that's building across insurance or financial services and you're thinking about how to apply AI to some of the use cases that we described today, definitely hit me up.
Awesome, Brian. We'll make sure to get your Twitter handle and include it in the show notes. And truly, really appreciate the time. Insights have been awesome, really awesome. There's just incredible content here. So we'll make sure that we have a write up on this and we share it along with the podcast for our viewers and listeners. Thanks for being on the show. Very curious, sort of how this space evolves over the next year or two, and hope to have you on in the future and we can kind of dig in sort of how the evolution of AI has happened, since this conversation. So. Thanks, Brian. Thanks for
Yeah,
being on
I'm
the show.
betting my answers will be very different the next time we chat. So
Yeah, I bet so. I bet so.